fragmentation seems to be the answer. But the US holds the one weapon, which is the dollar. 87% of every single trade transaction on earth is in that one currency. And they will use it to their advantage. As we saw with Russia, they just cancelled their reserves. It's staggering how powerful the US is. So that change to a multipolar currency world will take time. It just simply can't happen because the world is 400% of GDP in debt, 400 and something percent, of which at least 50% of it, maybe 70% is in US dollars. So if anybody tries to move away from the dollar policy, they've got no dollars to pay their debts, in which case everybody goes bust. So all of these things have to be done slowly. We have to split the world apart slowly.
Raoul Pal, a former hedge fund manager, thinks that the current circumstances could further boost the strength of Bitcoin as well as the cryptocurrency industry as a whole amid a general financial crisis that has seen numerous banking giants fall and more at peril. Raoul thinks that the cryptocurrency market and Bitcoin could increase in the future, closely replicating the chart patterns from 2013, because of the people's decreasing trust in banks and their migration to alternative systems when they learn about their benefits during crises. Given the precarious state of the economy, any new unfavorable developments, such as unexpectedly high inflation, sharp increases in interest rates to curb it, a resurgence of the COVID-19 pandemic, or rising geopolitical tensions, might cause a recession worldwide. Raoul Pal provides a macroeconomic outlook of the world economy in this video. He also discusses the liquidity issue, money printing, and the shift in the balance of power globally. Let's proceed with the video now.
Lowers the value of the denominator, that raises the value of the collateral optically. So people can't go bust when you print. Right? It's a really key thing that people don't realize. Secondly, I've done a lot of work on this. I wrote an article called The Truth and the Trap, where I calculated that the amount of government debt growth. Let's start at the beginning. The government is 100% of GDP in debt, and the private sector is 120% in debt. Let's call them both 100 for easy maths. Let's say the economy is growing at 2% and interest rates are at 2%, just for the easy maths. So 2% to pay the interest rates. If GDP is all economic activity, GDP growth, then one side eats up all of GDP growth. So the private sector eats all of GDP growth. So how do you fund the government sector without dropping GDP by 2%? You print it. And that's what they've been doing. They've been printing the difference on a 33-month lag, which is a 3.5-year time horizon, which is where all the short-term debt funding is. They just basically print the interest payments. The Fed balance sheet has been growing exactly by the amount of debt growth in excess of GDP, because that is interest payments. Now, the problem is if the rates are at 5%, private sector, public sector, well, that's 10% of GDP that needs to come to pay for it. GDP is growing at, this year will probably grow at 1%. So you've got 9% shortfall in GDP. Well, guess what? That's never going to happen. So the Fed's job is firstly to get rates down. So they need to jack them up, get rid of inflation expectations, get them all the way down again, and then print the difference. And they've been doing that all the way through. And guess what? So has Europe, so has the UK, so has Japan. And I'm just writing the article. I think I can prove that they basically all know what they're doing, which is they are printing the interest payments, and all of the central banks are doing the same thing. And it's like a giant agreement that they've never told anybody about. And I'm just doing a lot of work on this now. So I don't think that...
You don't think the chickens are ever going to come home to roost on that game, basically?
No. And what I think is GDP growth, which is the issue here, which is the real issue. GDP growth is made up of population growth, productivity growth, and debt growth. The debt growth, the rate of change has stopped because it's basically just interest payments. As long as you don't let your interest rates rise to 5%, you keep them about that GDP level, you can get through. Population growth, well, we know that's now died in the wool all the way down forever. So you've got productivity. So productivity has to change, and productivity is technology, essentially. And the core component of productivity, so technology just increases the amount of output per unit of energy. But what we're going to do within this, and Europe's forcing the way, is we're going to lower the cost of energy and decouple it from the fossil fuel market, which on an inflation adjusted basis has been about the same price for the last 60 years. Solar, geothermal, everything, including nuclear, will drive the cost of electricity well below that anchor rate of fossil fuels. That is the complete step change for the world, where we can get out of this mess. And we got out of this mess in the 1950s.
Saying, right?
Sorry?
Chamath has been saying this for a long time as well. Like the marginal cost of energy is going to go down to zero, and that's going to be one of the main.
Yeah, that's my view. Technology going exponential, marginal cost of electricity to zero is a complete game change for the world. We have to get rid of this debt situation slowly, because if you don't, all outcomes lead to complete societal global collapse, which nobody actually wants, apart from maybe Balaji.
So what is your view on crypto in that world then?
Crypto in that world, as I've always said, I mean, I got into this 2013 for exactly this issue. I lived through the European banking crisis. Our local bank in the village went bust and took people's money because they converted deposits into preference shares and then defaulted on the whole fucking thing.
Which bank was that?
I can't even remember which one it was. One of the bloody regional banks in Valencia. But they were terrible. I mean, the Spanish banks, the Italian banks, what they did was awful. And then Cyprus was the big ringing the bell moment when I started trying to set up the world's safest bank. And then basically I was told, if you have a non-fractional reserve bank, you'll take all the deposits, which Caitlin Long is learning. They don't want it. So that's when I learned about crypto. And that case is, I mean, this banking situation is almost identical to the European one that happened. And we know the answer is, right, we've got all this commercial real estate stuck on these banks as well. That's going to end up in the balance sheet of the Fed. The Fed will be taking chewing gum wrappers as collateral, you know, to give out loans to stop this thing imploding. Let's take anything, as the ECB did. So crypto does well in this environment because it is a way out, right? Every time you debase the currency over time, crypto goes up. And it doesn't go up just by a factor of the devaluation. It goes up by a large multiple because it's a technology that's building a parallel system here. So it can only be bullish. The most powerful narrative I've seen for a very long time is the sticky, higher for longer, inflation is ingrained in the system and we're not going back and this is a different world. So I put a log chart of 2-year yields, 10-year yields, right? And it's just one-way trend. And we saw this massive spike down in yields and an equal and opposite spike up, the pandemic. But the trend probably still going lower. And we look at it the same with CPI. And I look at this now and I'm thinking, have the bears got themselves in the same mess that the bulls did when it was the other way around? And actually the trend hasn't changed at all. And we often have to step outside of our own narrative to ask ourselves the hard question is, has everything actually changed or not? I don't see the evidence that it does, that it has.
I personally don't see a world in where interest rates can go higher. Like, I just don't see that world up for a sustained period, not with the amount of debt that's out there, without seeing like a large recession. And the idea that the QE was causing inflation just was never really a believable. Like, we had massive QE for 15 years and there was no inflation. It seemed like this was a cost push thing, which then got built into inflation expectations, which will hopefully dissipate with time. But it's not, in my eyes at least, it's not.
There is no evidence from all the decades in Japan, plus Europe, plus the US, that QE does anything. It doesn't leak into the system. So here's another conundrum that nobody mentions. It's like, well, obviously, you know, it goes to the banks and they lend out to hedge funds. It goes into the equity market. Look at the volumes of the equity market. Doesn't happen. The volumes do not correspond to that narrative. What's actually happening, as you guys have seen in emerging markets, is when you debase a currency, the markets just adjust the price. Right? Most people don't understand how the Venezuelan stock market goes vertical, or the Iranian stock market, or a whole bunch of these things. They're based on the debasement of currency. People get confused about hyperinflation, which is a consumer, you know, there is a point where it tips, but if not, it does not affect prices because you and I don't get more money because the Fed is printing it. We just don't. And what do? Go and tap on the Barclays door and say, well, they're printing money. Can I have some too, please? Let's fuck off.
Yeah.
It just doesn't happen that way.
Will the US continue to be a major world power for a while, or will they be deposed? Comment below with your thoughts so we can hear them. Additionally, be sure you subscribe, like, and enable notifications. Thank you so much for watching.